Terrific. Well, thank you, everybody. Welcome. We appreciate you joining today's webinar. It will be recorded so that we can send this out to everyone after. So if you're don't have to take notes during the presentation. So we're excited to have you with us as we dive into the most common reasons businesses fail SOC 2, and more importantly, how to avoid them. This is an interactive session, so drop your questions in the Q&A at any time, and we'll address them during today's session. To get started, I am pleased to introduce the moderator of today's webinar, ASMGI's President and CEO, Steve Racing. Steve, over to you.
Thanks, Gail. And hi all, and thanks to you for sharing your time with us today. We've got a great webinar today. We've got a great expert too.
Thank you, Steve.
Thanks for being with us, Bruce.
Oh, you're welcome, of course.
Anywho, the webinar is called SOC 2, Fail SOC 2 Once, Pay Forever. We'll explain that today. So here's what we're going to talk about today. We'll do a little background on ASMGI and then on BH Neuron, and we'll ask the expert some questions, and then we'll open it up for audience questions. So you'll have a chance to ask questions as well. And then if we have time, we'll do some closing remarks. So without further ado, some background on ASMGI. So we're headquartered in Cleveland, Ohio. We have SOCs or staff in Cleveland, Raleigh, Trenton, Provo, Utah, Toronto, Canada, Minneapolis, and San Antonio. We have over 700 customers and 400 managed service customers. Our customers include colleges and universities, financial services firms, healthcare firms, manufacturing firms, legal firms, and retail firms. So we call ourselves a full stack technology company, basically because we do the full stack of technology. So we get involved with, or we have expertise in strategy, cybersecurity operations, managed IT services, DevSecOps, and custom application development. So we have a theory at ASMGI that one team equals a total solution. It's the program plus technology plus operations. If you're missing any one of those pillars, we say a lot. If you're missing any one of those pillars, it's not a total solution. The old way of thinking is the point solution mindset, and the new way is the holistic mindset. The old way is characterized by being reactive, focusing on individual things, fragmented and inefficient, and you can spend a lot of money and not necessarily improve outcomes that much. The new way is more proactive by nature. It focuses on total solutions. It's both gap-based and risk-based, and you can spend less and improve outcomes more. So why don't you tell us a little bit about you, Bruce?
Okay, sure. So what's called a sole practitioner, and that means I don't have any partners in my practice. I do work with several other technology specialists for very complicated security issues in technology. Before I found the firm about 7 years ago, and since then I've performed about 100 SOC reviews annually, and these are SOC 1s and SOC 2s. And I actually got the I used to work for the biggest CPA firm in the country, not biggest, the 10th largest CPA firm in the country. And during that time, I met many people like Steve and service organizations, and I did the same thing, except there was quite a few more SOC 1s. And then after I founded my own firm, some of them contacted me, wanted to know if I could do their SOC 1 on my own, and I said, sure. So while I was at that big firm, we also worked on my department, about 200 financial audits annually, and there were more than 100 SOC audits every year, maybe 500. However, I had a large staff. And in addition to that, I practice in information privacy, security assessments, internal control over financial reporting. That's a SOC 1, SEC Regulation AB, which you probably never heard of, but if you would hear about it when the SEC contacts you and say you have to have one, and some other IT stuff like using making journal entry selections, and IT general control risk assessments, and blockchain. Even though I've never done any work with blockchain, but I did do some studying of it. Also, for a while, I was at the AICPA as a senior manager for SOC and related services.
Great.
That's my background.
Great, Bruce. You're definitely qualified to do this.
Well, thank you.
So let's talk about some SOC 2 stats. The first one, this is where we're going to define why failing a SOC 2 once costs forever. 60% of companies failing a SOC 2 see higher audit fees in subsequent years. We know that's true, but it's not true for you, Bruce, is it?
That no, I keep my audit fee standard, but usually when you fail a SOC 2, in most cases, then the company will just go find another auditor. We'll give them a clean opinion, which is a terrible state of affairs for the accounting profession.
Mm-hmm. 40% of people report losing at least one major deal to noncompliance. 70% take 12 plus months to recover trust with enterprise clients.
So I'd like to add something, Steve. We had one client, I had two, that one was a bank, and they failed their SOC 2, and then they didn't make any changes, and then their ATM system got hacked. And that's exactly why we failed them, because they had control weaknesses in a bank's ATM. What did the company do? The executive in charge of IT director, well, he was given his walking papers. The CFO then had to hire an IT consultant to clean up the mess and deal with all IT. CFO no longer involved. So those two things, the individual, the IT director, for not fixing things, okay, he had to find a new job, and then the company itself had higher costs because they had to hire a consultant, and that was one result of a failed a SOC 2. Another company, they failed their SOC 1, and what the company did was they just brought in and also had to bring it. No one got fired on that one, but in that one they had to bring in a SOC 1 consultant who had experience in SOC 1 and would help the company comply so they could pass the next one. So there's definitely costs involved with failing.
Great. Great. Hidden costs of noncompliance. Increased cyber insurance premiums. So I would say there's no proof of this, but it does happen sometimes, right? Strained vendor contracts and renewals, loss of competitive edge in RFPs, reputational damage with clients. Audit secrets revealed. Aha. So auditors look for consistent documentation, not perfection, right? Evidence of a remediation efforts often matters more than past gaps. Vendor management controls are one of the top 3 failure points. Early scoping conversations with auditors can save 20 to 30% in fees. Not with Bruce.
Well, that's because I have a fixed fee. I've done so many of these, and when you have these scoping conversations, a lot of the really critical stuff doesn't even come up as much as you try to obtain it. But I find if I do a good job, which I always do, then they'll retain me for future years, and that way I can recover any extra time it takes in the first year. And the first year does take a lot longer than subsequent years.
Gotcha. Common failure points. Vendor access controls not enforced. Weak remote access encryption. Missing incident response documentation. Lack of consistent logging and monitoring. Do you have any thoughts on this, Bruce?
Well, sure. Those would definitely result in well, you might still get what's called a clean opinion. Oh, okay. So now we'll talk about auditor double talk. So in auditor language, a clean opinion is an unqualified opinion. To most people, unqualified means bad, and a bad opinion is a qualified opinion. So often, if you have these weaknesses or failure points, you still might get a clean opinion. However, the issues would be in the report and they'd be called out. So it would say what the service organization is doing wrong. Now, in my review of many SOC 1s and SOC 2s, what I see other auditors issuing, let's just say, a bad report, a qualified opinion, is usually for too many admins and admin access to production. So that's a often result in a qualified opinion. And the other issue is changes. So service organizations or IT organizations are always making a lot of changes to software, to code, and they usually document it now. There's a lot of software available to document what changes you're making. Where they fall down is they don't have a second person authorizing it. So what auditors like to look at is a segregation of duties. That's a key control between the author of code and between the authorizer. So if you don't have an authorizer now, what do? Well, if you do the work before the end of an examination period, then it can be authorized after the fact. But if it's after year end, after the end of the examination period, so a SOC 2 covers, a type 2 covers a period of time. If it's after the end and you haven't authorized that code and it's been placed in production, then you fail. Now, auditor might say in the exception that a code was placed in production on this date, and it was not authorized until after it was placed in production on this date. But all this has to occur during this so-called examination period, and if it occurs afterwards, then it would be a serious exception.
Gotcha. Action steps to succeed. Perform a readiness assessment. Close high-risk gaps first. Document policies and evidence early. Involve leadership and IT partners. Build a repeatable compliance program. Do you agree with this?
Oh, yes, definitely. You want to do a readiness review or assessment before you actually do a type 2, because in a type 2, whether it's a SOC 1 or SOC 2, anything you find that's an exception, deviation, vulnerability is going to get reported. Done. If you do a type 1, then you get a chance to fix it. It's referred to as an open book test. So auditor says, did you do this? Oh, yeah, we did. Do you have documentation of this? No, we didn't document it. Okay, well, I recommend you document it. Then they document it, and then a type 1, all's good. It doesn't get reported. So that's very important to do a readiness assessment. Now, you could couple that with a type 1. So in a type 1, you're paying for the readiness assessment anyway, and then you get a type 1 at the end to boot. Now, the service organization might say, well, our client wants a type 2. Well, here's all you do. You tell them we are doing a type 1 first, and after the type 1 is completed, then we will commence with a type 2. I've never seen any purchasing organization or a customer of a service organization say, no, we just got to have a type 2, because then you're not going to get the business. And if they're talking to you anyway, they want you to do their IT work for them. And almost, I've never seen a case where they wouldn't take a type 1 the first time, and they usually couple that but say, okay, we'll take the type 1, but you're gonna have to give us a type 2 by X date.
So what's your recommendation, Bruce? Do a type 1 first and do a type 2 after the fact? How long after the fact?
Well, you're going to need at least, even though AICPA says there's no limit on the time, a minimum time period, maximum time period, but the rule of thumb is type 2 needs 3 months. So if you finish a type 1, you can conceivably have your type 2 within 3 months after that, because you have to have a period of history of transactions. Now, what's a transaction if you're not financial? It's usually the code changes, new employees, terminated employees.
You have to do what for these employees?
Oh, so in a type 1, let's go back to a readiness assessment type 1. You would only test one new employee as a sample to get the documentation of what a company uses for when they hire a new employee, employment contract, confidentiality agreement, training. On a type 2, you do a sample of say they hired 5 or 6 employees, then you take a sample, maybe 2. Same thing on employees. With the confidentiality agreement and the employment agreement, if a company has, say, 50 employees for a type 1, you're just going to test 1. You want to see 1 employment agreement, 1 signing a confidentiality agreement. On a type 2, if they have 50 employees, you're probably going to randomly select 10 employees and ask for those documents. So that's the difference. In a type 2, you're doing a lot more sampling across the population. Same goes with code changes. So on a readiness assessment, you can say, do you document your code changes? They say, yes. Where do you document GitHub? Okay, give me a list of all of them. You get your list. Then you pick one code change and you want to see, was the change, this is on type 1, was it described? And did the author and the authorizer differ? Were they two different people? And then if they're not, you find out, because of type 1, you can fix it. Okay, they find out that that's going to be a finding. In the future, somebody's got to lay the law down at a service organization that says, you make a code change, you got to get somebody else to authorize it and before it goes into production. When you go to a type 2, there's a lot of testing because you might have 1,000 changes. And when you have 1,000 changes, the standards say you should test 50 of them, but AICPA lets you get away with testing 25, or you can prioritize them and say, okay, give me a list of your significant changes. Say you had 10, 15, so you're going to test not one, but say 2 or 3. That's the difference. There's more testing in a type 2.
Yep. So we're going to ask you some questions, Bruce, now.
Okay, go ahead.
What's the number one mistake that derails most SOC 2 audits?
Not putting somebody in charge of the SOC 2 liaison. In other words, who at the service organization is going to deal with the auditors? You have to have somebody that has authority to get the information the auditors need. Because if that person doesn't have authority, then the IT department may not respond in a timely manner or respond with documents that are responsive. So then the job drags on, and eventually auditors are going to say, you just don't have the documentation. They may have the documentation, but whoever is interacting with the auditor doesn't have the authority to get people in the IT department on board. That's one thing. The other thing is not having the documentation organized. So an important part of a SOC 2 on the service organization side is having all the documentation organized in a manner that somebody that the IT department or the liaison at the service organization can get that hands on the document fast. So if an auditor makes a request, usually say 10 items, we need these 10 items, and you don't get back for a week or 2 weeks or 3 weeks, you're going to miss the deadline and the reporting deadline. And then you have to, both parties have to agree to conclude the engagement without issuing a report. And then you have to start all over again. So 2 things, having a liaison that has authority, that people respect at the organization, are going to be responsive and timely. And the other thing is organizing the documentation in a manner that it's could easily be located and provided to the auditor.
Do you issue a sample request up front?
No, because every company, you don't know what's there.
I got you.
You just don't know what's there. So there's no sample up front, but during if you're doing a readiness review, then as soon as you get started, you're basically going down the list of these trust services criteria, which are very confusing. And you have the opportunity to say, well, what's this about? What's that about? What are you going to ask for? But usually within the first week of starting one of these, we have a request list, usually 10 items on it, 10 things that we ask.
Gotcha. What are those?
A list of, number one, a list of all the software you use. 2, a network diagram, and that'll send them scrambling. And then if it's not a real engineering diagram, it's just going to create a million more questions. So it's best to have an engineer design a network diagram, and then what? As soon as we get it, we're gonna decompose it. We're gonna reverse engineer it and go back to what's really underneath it to figure out what the service organization is using to supply services, and then also with the list of software that they're using, see is this reasonable compared to what the network diagram that they've given us.
Mm-hmm. Next question. What do auditors look for in a SOC 2 audit?
Responsive documentation that is that somebody takes responsibility for. So usually on a policies and procedure, it's easy to get sample policies and procedure, but make sure there's nothing in there that doesn't apply to your organization. So you can get a lot of samples, sample policies and procedures, but if there's stuff in there that clearly doesn't agree with the software list and the network diagram, then it's a kind of a red flag. The other thing is that this policies and procedures should have the company name on it, and it should have who reviewed and approved the policy and the date. That's one example. Also, on the employment agreements with the usually with IT people, developers, security officers, director of IT. So what we'd be looking for is a complete document. In other words, everything's got to be within the 4 corners of the document. That's lawyer talk. That means that here is the employment agreement, and at the bottom it is signed by the employee, and it is signed by the whoever in the CFO, the HR person, whoever signs for employment agreements at the client. And the same thing on the confidentiality agreement. You know, they're pretty much boilerplate, but so what the most important thing is it has the company's name on it, and it also has the employee signature on it and the date. And they want you to sign it every year. I don't go that far. As long as there's a confidentiality and employment agreement in there when they've signed up, that's fine.
Gotcha. What are trust services and what are they used for?
Okay, there's 5 of them. So you got security, confidentiality, availability, transaction integrity, and privacy. Now let's talk about one that you want to stay away from. That's privacy. Why do you want to stay away from it? Because it's so onerous that you're going to fail. It's going to cost $1 zillion. Give you example. When it first came out with these privacy criteria, we had a client. This is one of the big CPA firms, second biggest insurance company in the world. They wanted to have a privacy SOC 2. Okay, so the big company, reasonable that you would have a 6-figure audit fee. However, they assigned a bunch of lawyers to work with me, and it turned out they had 100 findings. This is the biggest insurance company in the world. It's very, 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 very difficult to comply with the privacy criteria. So I don't recommend it at all. And then the other one I don't recommend is transaction integrity, because maybe of the 100 SOC reports that I look at every year, I would say less than 2, maybe 1 or 2 address transaction integrity. So it's not something that's you even need. The most common one is security. It's what it says. Availability, clear what it is, and confidentiality. Those are the most common. A lot of companies have just one, security, or they'll have all three. You don't usually see just confidentiality or just availability. Now, for each, and there's about 22 this common criteria, and those include all the security criteria. And I think there's 22 of those, and availability and confidentiality have maybe 5 more. Then for each criteria, they say what your objectives are. Um, like for example, the company protects confidential information. The company is able to restore data in case of a natural disaster or equipment failure. Another one might be for security, company has a network diagram. So, or maintains a list of software. So all those criteria, they're not worded exactly like that, but that's what they're asking for. Also, there's a criteria on employees that employees they have control so that employees have integrity and ethics. So again, sometimes it's confusing what they want in these criteria, but that's what the auditor's there to boil it down into plain English and
Gotcha.
not even IT speak, because you're also going to have a CFO on one end that also has to deal with the auditors. So the kind of things that are in there as written are very difficult to understand what they're looking for. And the auditor then explains to both the CFO or HR director and the IT people in plain English of what's necessary to pass the audit.
Gotcha. Thanks. How should you prepare for a SOC 2 audit?
How? Well, the best way to do it is one of two ways. One, hire an IT service provider like ASMGI. And I'm not doing this as a plug for ASMGI, but that's one way to do it. The other way, which is more expensive, is hire a dedicated SOC consultant to shepherd the company through the SOC process. Usually the company winds up hiring that guy or lady because they find so much and they find that things aren't as they were told. Say the CFO or even the VP of IT finds out things aren't the way the IT department is holding out to be. So the consultant finds all this, and they bring the consultant in to manage the process. And that's the other way. That is probably a lot more expensive than working with ASMGI to shepherd a company through the SOC 2 process.
Gotcha. Thanks. Now we're going to open it up for audience questions. We'll wait a second and see if anybody has any questions.
Sounds like a CPA, continuing education. Nobody, everybody's afraid to ask questions, so please don't be afraid to.
There we go. we have some good questions. Anyway, what's the very first step a company should take to if they're considering SOC 2 compliance?
Well, they have to find an auditor that has experience with SOC 2. So the best place, most companies who are going to need a SOC 2 probably already have an accountant. Ask them if they could recommend somebody. And if not, ask peers in your industry. If you go to conferences, who do they use? It's, I don't know if the internet is a very good way to find a SOC 2 auditor anymore, because everybody who's showing up on the top hits on a search engine, you know, they're buying those ads, and they want to sell you the preparation, and then they throw they want to sell you the preparation and the organization of the documentation, and then they throw the audit in. I don't think that's the best way. I think the best way is to get a recommendation for an auditor from somebody you trust.
Gotcha. How do you know if you're ready to start a SOC 2 audit?
That's a good question, because unless you have experience with it, you're not going to know. And you're probably not, because the SOC 2 is asking for all, I hate to say it, it's asking for a lot of minutia. I did not design these standards. For some reason, they always add more and more and more and more on every time they revise it. They've been about through 3 or 4 revisions in the last 30 years. And every year, the guide gets longer. And the guide presently now for SOC 2 is like 400 pages long. And there's no way, I mean, the best intentions in the world, nobody's going to read it except me or somebody at one of the big 4 audit firms, where they're going to go through this thing line by line by line, and you're looking for the word should, must, required. Sorry, not required. Is should or must. I'll consider. And everything in that standard that says should, must, or consider, the auditor has to get documentation from the client. And it's unlikely, unless you have somebody at a service organization that's been through this before at another company, they're not going to know what to look for. Again, you could pick the guide up and you could search for the word. Well, you can get if you can get a PDF, but the AICPA will not provide one. You got to search for the word must. In other words, auditor must do this. Must means get this from the client. Auditor should do this. Well, should and auditor talk means must, means the same thing. You got to get it. Well, consider, that means you got to ask a question of the client. Well, do you do this? Well, there's thousands of those words, must, should, consider, thousands of them in the guide. Nobody is going to, you go through a few pages and you say, this is just too much. What do? You bring in somebody who's either got experience as a consultant to assist you in preparing, or just hire an auditor to do the type 1, or hire a firm like ASMGI to assist with the preparation. But I've never seen a company can do this on their own, even very, very big companies.
What do you think of platforms like Vanta or whatever?
Well, the two that come to mind are Vanta and Drata, and I work with those a lot. I know there are others. And to me, all they are a file cabinet. So they've organized data in a certain way based on the criteria, or they have other frameworks as well besides SOC, but they've organized it by the criteria of the different frameworks, so that it's basically a file cabinet. they give the auditor access, auditor can go in there and get what they need. So the person at the service organization side doesn't have to waste time on getting an email and finding something and send it back. Auditor can go right and get it. Problem is that that Vanta and Dratus are set up for everything in the kitchen sink. So that means that there's a lot more there that you need. So you're going to spend a lot of time putting stuff in there that auditors aren't even going to look at. I would say more than 90% of it, they are not going to use it. So how do you know what to put in there? Again, if you have somebody on staff who understands this process, they pretty much know what the auditor is going to look for. We all look for basically the same stuff. Then, and why do I know that? Because I review 100 of these I review many of them produced by the Big Four, by the top 20 CPA firms, and also by smaller firms. So I know that it's a lot of commonalities between what we're asking for. So then you have to have somebody who knows what we're going to ask for. So you have it. Second thing, organization. It's like the old shoebox. If you throw everything in a shoebox, all your receipts in your shoebox, and you bring them to your account at the end of the year and say, here, do my taxes. It's a nightmare. Or you can set up a filing structure. So what is Vanta? Vanta is a filing structure structured by the criteria that the auditor is going to look at. Now, if you understand a SOC 1, you set up a file structure on one of your servers, and you'd probably have to have a training session with the IT people, not very long. Here is the file structure on our server. And now when I ask you for something, just put it in that folder and let me know it's there. And then when the auditors ask for something, you can put your hands on it very quickly.
Can you walk us through an audit day in the life?
Oh yeah, sure. So the first thing, you do scoping, and it might take 30 minutes to figure out what's going on at the client, the stuff you need to actually prepare an engagement letter. After that, you agree, the engagement letter has the scope of the SOC and the fees, who's going to work on it, various things like that. All the legalese that the lawyers put into a.
What do your engagement letters have, Bruce?
What do they have in them? Oh, like the scope, if there's any subservice organizations. So a subservice organization is most companies also are using the cloud. They might be using Slack. They might be using GitHub. They might be using Datadog. If they're financial, they might be using Interactive Brokers. They might be using various companies to provide services. Those are excluded from the SOC report. And there's a statement that says, look, we're not auditing what's going on at the subservice organizations. That's in there. Then after that, there's the auditor's responsibilities, the service organization's responsibilities, the inherent risks, and a SOC, inherent risks in internal control, what the objectives are, not the objectives, the objectives of the engagement, the fees, some exclusions, some things that aren't covered. That's basically what's in the engagement letter. So, and now after the engagement letter, then what we do, and what my old firm did when I was there, was we produced a timeline. It's a waterfall chart. I know there's a lot of criticism of waterfall charts, but the audit isn't a sequential process, and it steps you through week by week the activities leading from the original kickoff meeting through the issuance of the report. and all the steps that are taken. So that's timeline of waterfall chart timeline of significant events. Then you have a kickoff meeting, and then basically the auditors going through the trust services criteria, and each week sending a list of requests, documents, some questions, and the client responds. And about 6 weeks before the end of the examination period, if warranted, we do a penetration test. I know you might have your service, oh, we get so-and-so to do a penetration test. Well, I like to do my own. And then we also, on your, if you have a firewall, a lot of companies, they don't even have firewall anymore, but they have security groups, say in Amazon, and we have, my IT security specialists, now we want to look at those security groups. We want to look at a firewall if it's there, the configuration. We want to look at the VPN, and that's all done about 6 weeks before the end. That gives you time, the client time to fix it if it's not good, and if it's too early, audit could be criticized that things could be changed. There could be changes after you tested it. Then after that, right about that same time, we prepare a description of the system based on what we found and what the service organization told us. Now, the service organization has to take responsibility for the description. No service organizations write descriptions, none. Not Amazon, not Google, nobody. How do I know this? By talking to the partners on those jobs. They say, no, we write them. We write them, but then we give them that description to the service organization, and they have to approve it. Why? Because it's written in a certain way. It has to be written in a certain way. Now, for the description of the system, there's also got a bunch, I don't know how many, maybe 9 more criteria. I'm not the exact number. And it says, okay, description has to have this, has to have this, has to have this, has to be worded in such a way. It becomes overwhelming. I mean, unless you work with this all the time, you'll be wasting a lot of time. Auditors just going to send it back. So auditors usually assist, what's called assist in the preparation of the description. When it comes towards the end, there's some tests that are done after the end of the examination period. And then if there's a finding summary, it goes to the service organization where they get to address whatever exceptions have been found. And verbal explanation is not evidence. Anything at that point of a finding has to be documented.
Gotcha.
Then after that, there's a management representation letter that has to be signed. Again, auditors write that because it has to be, no changes can be made to the wording. It's a boilerplate. It has to be a certain way. And then the other document is called an assertion. Again, auditor talk. It's got to be written in a certain way. Auditors prepare those, or they assist and send to the client. So once the description is approved, the findings are addressed, the management rep letter is signed, the assertion signed, report is issued.
Gotcha. We've got a couple more questions, but it doesn't look like we're out of time. We have time to get to them. Do you have any closing remarks?
Me? Well, if I had a closing remark, it would be don't underestimate this process. A lot of companies do, and it becomes overwhelming because it's assigned to somebody who also has a job. They have things to do, and if they are in charge of liaisoning with the auditor, they've got to do their job, and now they've got to deal with a SOC also, and they might have a CFO or a CEO breathing down their neck and saying, "Where's the SOC? Where's the SOC report? And also, why haven't you done these other things that your responsibility?" Same thing on the IT side. That if they, again, the importance of having a liaison to shepherd the process that the IT people will respect and not ignore, and get the auditor stuff, the documents and information in a reasonable time frame. And that way the job can be done by the agreed upon time frame.
Gotcha. I think that concludes what we have. Thank you all for being here.
All right. Thanks, Steve.
See ya.
Dale, appreciate it. All right. Bye.